Hello, Jim here. I've been on a journey to learn the right way to sell options, and I've been increasing how much I can make both on a weekly and monthly basis for a long time, going back almost 3 years. Today, I want to share with you how I've been able to be successful with that, and I'm going to talk about my future goals. And then I'm also going to share some trades, so stay tuned to the very end, and I'll share with you my trades from a couple weeks back. So let's go ahead and get started. Let's go ahead and get started. I typically like to give a quick update about what's going on in the markets. The Fed did come out and no increase in rates, also no decrease, and probably we're going to hold steady for the rest of the year. I'm not sure they're going to increase rates at all. And I think that's kind of a good thing. I feel like with earning pretty good interest on the cash available has been a big difference. The amount of interest I'm able to earn, especially at Fidelity, has really been surprising. Now, one area of concern is I have noticed that the Treasury is having a tougher time with financing the debt, and that's something also to keep an eye on. That can also cause interest rates to be higher. And then also going through the earnings right now, it's been kind of an interesting earnings season. Some companies have done well and they've beaten earnings, but then they've given poor guidance and they've just been hammered. Other companies have given, or have had bad earnings and given good guidance and have done really well. And then we also have companies that have bad earnings and bad guidance that have been hammered, like CVS. In my next video, I think I will talk about how I'm handling CVS. I did have a couple contracts on CVS that have been assigned to me, but I'll talk about that in the next video. Now, I do think, especially with earnings, the impact when a company does miss earnings or they give poor guidance has been kind of a bigger impact. I know with CVS, it was down almost 15-20%. I believe Starbucks was that way, and then maybe even AMD. So, and I think that's going to continue. It just seems like more and more people are trading, and when that kind of news comes out, it hits the market hard. Now, what's key or what's really important is not to overreact. Don't panic. Give the trade some time to kind of regroup from some of its losses. I found over time, especially if you wait 2 or 3 weeks, the stock will recover some of the losses that it has. And I've had that happen with a number of different securities. So let's go ahead and jump into the main part of this video. I like to reiterate in every video that's what's so important is picking the right companies. It becomes a lot easier if you're picking companies that you like at good prices. One thing I am working on is ranking my securities in my trades. So it's going to be like a dual ranking. I'm going to have a ranking on the company itself, looking at debt, productivity, return on investment, or ROE, ROIC, which is invested capital, and then also return on assets. And then also looking at PE, what's the year over year earnings forecast? Are they looking to really increase earnings quite a bit, and are they growing at a good clip? So I'll have that kind of information. Then I'm also looking at the trade. So in some cases, you may have an option trade that is a lot better than others, meaning the return on investment for making that trade might be a lot higher. It might also be a much safer trade than others. So I'm also looking at that, trying to come up with a way, not just to rank the stocks and ETFs, but also to rank the trade itself. So, and again, I'll share a little bit of that at the very end of the video. One of the new sheets that I'm working on in my weekly planning worksheet, we'll talk about that. And if you're curious about my planning worksheets, I do a planning worksheet every week, typically on Sundays. I release it to my memberships on Patreon. I have 3 different levels of membership. They all get all my spreadsheets. I also have other content. I have grouply meetings. We're getting ready to meet this Sunday where we talk about different securities. We talk about different tools. We talk about different ways to trade. And that's worked out really well. And then I have the highest level, which I believe is full right now. But if you're curious, it does kind of open up from time to time. Someone will leave and then, it'll be an opportunity for someone else to join. And that's more like of a coaching membership. priced it really inexpensively just so I can really help people. It's a $25 a month, and you get a weekly coaching session, which is supposed to be 15 minutes, but always runs longer. It's usually more like 30 minutes. So again, if you're interested in that, take a look in the description. The details will be there. As well as please subscribe, hit the like button. I'm trying to get the word out that options are a tool that most people should use. It's not really that complex. If you can buy and sell stocks, you can definitely buy and sell options. And they can be as risky as you want them to be. They can be outrageously risky, or they can be, relatively safe, in some ways safer than buying and selling stocks. So now what I do like to teach people too is to set goals. Don't just, fly by the seat of your pants. I've always set goals. I've set both weekly and monthly goals, and I try to keep it really simple. For my typical goals for premium is just, well, how much can I earn on a weekly basis? How much can I earn on a monthly basis? Especially in my different accounts. At first, I just did it, everything lumped together. Now I'm actually working on goals by different accounts. Like I have a Roth that's right around 55,000. I have an IRA that's like, I think right around 400. And I'm going to have different goals for each of those types of accounts. And it seems to work a little bit better. Like for my IRA, I'm trying to get between 1% and 2% on a monthly basis. And for my Roth, I'm trying to get closer to 2 to 3%. And I find that works out pretty well. And then as I go, I will look back and make decisions. Should I increase those goals? Should I lower those goals? And that's what I'm talking about a bit in this video. I've had 3 months of, premium that I can compare to, and I'll talk about that at the end. In my planning worksheet from a couple weeks ago, I have the details, how I did each month, and probably what I'm going to set the next group of goals at. I think I'm going to try to achieve a little bit higher. One other question I get a lot of times is, why do I go so far out? I'm okay with writing calls and puts from, especially puts, between 30 and 90 days. Now calls, I'll go even farther out. I'll even do leaps for calls. I like to go a little bit farther out so I can identify a price and go a little bit lower on the strike price. So if it does get assigned to me, that I get it at a price that I really like. So now in times like this, when we're going through kind of a rough time, April was kind of rough, and I think May is kind of potentially could also be a rough month. And usually a lot of times during the summer, I forget what the saying is, but it's like leave in May and come back in August or something, or come back in September or October, just because the summer months can be pretty rough for trading. But what I found is, in cases like this, when the markets are going through a rough time, it's really important, especially with puts, to buy the protection on the downside. So buy the put. Instead of doing a cash secured put, do a vertical put credit spread. I like to teach people to do it anyway, even if you don't need it, especially if it's inexpensive. Buy that protection. Now, with what's gone on recently with CVS, Starbucks, AMD, and a few others, you can really see it can really help you big time. If you purchase that put, as the stock goes down, it protects you from a big loss. And also that gains value. So if you still want to own the shares, you can sell that put like I did recently with CVS, and you can gain the income from selling that put, and then it'll lower your cost basis for the stock. So again, I'll talk about that a little bit more at the end. But I also found that during tough times, I also like to go lower on the delta. So instead of doing a 30 delta, I'll do a 20 delta, or instead of a 20 delta, I'll do a 15 delta, especially with something along the lines of puts. Like I'm getting back to doing more like a 15 put on puts going forward, either vertical put credit spreads. If it's a vertical put credit spread, I'm mostly referring to the short or the put you're selling. I like to have that around a 15 delta. Calls, also around a 20 delta, 25 delta. I'm one of those, if they're assigned to me, I want to own them forever. So I don't really want them assigned away. So if you take too much risk with the covered calls, they can be called away from you, because once we do get into a recovery and the stock shoots up, you could find yourself in the money. So, and then finally, or not finally, but another important piece is to have a balanced approach. I have quite a few calls and quite a few puts, probably like 60% puts and probably 40% calls, or maybe even more than that, because I always have a lot of calls on my Coca-Cola shares. A lot of times I don't really worry about it because I'm so used to where Coke is typically. Like right now, I believe Coke is right around 62.50, and most of my calls are between 60 and 70, with a majority at around 65. So just by the nature of that, I have so many Coca-Cola calls, and I move them around. Sometimes I'll roll them lower, sometimes I'll roll them higher, sometimes I'll go farther out, sometimes I'll come back in closer for expiration. So having a balanced approach can make a big difference because, depending on what goes on with the market dives, and suddenly your calls are really profitable. The market goes up big time, then your puts become profitable, and it just having a balanced approach really works nice. And then also working with different strategies. Another reason for this is you'll find at times certain trades will work really well, and then literally a couple weeks later, maybe a month later, that same trade doesn't have the premium it did last time you did it. So you may find that the same trade won't always do it. It would be really simple, and I do believe some people do trade SPX because of this, or SPY, because it potentially doesn't change as much. But for most securities, it's really difficult to repeat your success month after month after month, like doing a 30-day expiration on a particular stock. The premium can change drastically. And my last point is, when you take all the, when you rank the trades and you identify really good companies and you identify really good prices, it becomes a lot easier if they do get assigned to you. So having it at the right price and it's assigned to you works out well. Always remember the original reason why you decided to trade in that particular stock. If you had purchased the stock, say 2 months ago or a month ago, depending on how long your expiration is, you'd be in the same boat. Actually, you're better off having sold a put, because you're, by nature of a put, getting it at a lower price. But just remember, there's a reason, and say you've rolled it twice, it might be 3, 4, 5 months ago, you like that stock at that price. Now, that's easier said than done when a stock drops 10, 15, 20%. Of course, you want it at the lower price, but long term, that stock could double, triple, quadruple, and missing out on owning it could be a bigger impact than paying a little bit more for it. So just something I want to mention, because one area that I'm different is I want to own most of these shares. Now, when I do make mistakes, I will cut those losses like I did with Big Lots and Lumen. But others, I paid too much, or they got deep in the money and they got assigned, so it was like a loss temporarily. But now they're very, very profitable. And that happens probably with 8 out of 10 of the stocks, and maybe 1 or 2 are dogs, meaning, they don't manage the company well and they keep going south. Big Lots, again, is another example, in Lumen. But I just wanted to share that because, again, when we go through a tough time with either a stock or the market, you can kind of start questioning yourself. You can focus so much on the loss, like, wow, I have this huge loss. But don't forget the big picture. You're an investor. You're not a gambler. You're not in it for quick money. So something I wanted to share, something I wanted to talk a little bit more about. Because, again, when I've talked to so many people in my memberships, and I get a lot of people panicking because of what's gone on with Starbucks and CVS and AMD, I feel like you don't need to panic as much as you think you do, or you are at that particular moment in time. And by keeping a history, I do it automatically because I share all my trades with my memberships, that I know why I made that trade. I can just go back, I can look at Patreon, I can look at Discord, and I can go back to that trade and I can understand, wow, I really like that stock at that price, and this is the reason I did. So something to just keep in mind. Let's jump into the next part of the video, and I'll share with you my planning worksheet from 2 weeks ago. I've opened up my planning worksheet from a couple weeks ago. This was actually 2 weeks ago from last Sunday, April 14th. At the top of this, there's a bunch of trades. I'm not going to talk about these. For this particular planning worksheet, the next group of expirations I had was like 5 weeks away. So I just listed all my different positions that were in the money. And that's why you see at the top here anything and everything that was in the money. Now, this was 2 weeks ago, but what I do want to talk about is the trades that I had on the 14th or during the week of the 14th. So one was DocuSign, another company I like to trade in. This was in the Fidelity IRA. Again, I like to talk about, I've got a Fidelity IRA and a Fidelity Roth, and I also have two accounts at Schwab. So I have all my retirement accounts at Fidelity and all my taxable brokerages at Schwab. So this was a vertical put credit spread, 52.50, 42.50, 26 delta expiring 6/21/24. The current price was 57, and I brought in 311. Capital requirement was 1688. That's just 2,000 minus the 311. The 2,000 comes from the spread times two. So for each contract, it's $1,000. It's a $10 spread, which equates to 1,000. This for a yearly return was 100%. So DocuSign, I'm interested in them because I'm working for a client and we're trying to build a competitor product to them. So I like to keep an idea of what they're doing, and I also look at their products. This is Logitech. They make a lot of the different accessories, and it's a company I've wanted to invest in for a long time. And this was the first trade I've ever been able to do with them, mainly because they've always been pricey, but they have no debt. They're a well-run company. So I did a 75.65. I did this on the 15th, vertical put credit spread, expiration May 17th. So shorter expiration. At the time, it was $80, so it was about $6 cheaper than the current price. I brought in $243, and it was $157, so probably my best trade for the week, primarily because of the shorter expiration. It was May 17th, and it was April 15th, so this was almost a true 30-day trade. Now, the next one is IWM. This is one of the exceptions that I like to do for cash. A lot of people will do SPY. I prefer IWM just because it's a little cheaper and I like the Russell 2000. So I did a vertical put credit spread 180, 170, a 20 delta expiring on 6/21. The price was 194, so pretty far out of the money. And since I don't care to own IWM, I mean, I'm fine if I do end up owning it. But it's a trade I typically have done to make money. I currently don't own any IWM, and I probably have done 20 or 30 trades on it. So it's a good return, 73%, 233. And if IWM continues to stay around 190, 195, I'll probably do a lot more of these. Con Edison, this is a covered call. This is one of the crazy companies I've had. It's been in the money almost the whole time I've had it, and I just keep rolling covered calls. So I rolled a covered call. Or was this? Yeah, this was a roll. It was originally expiring 6/21. I had done it quite a while ago. It was 88.26, so about $3.26 in the money. And I rolled it out to 11.15.24, kept it at the same strike, and I brought in $287. This is the cost basis for it, so almost just shy of a 5% return, 4.64. And I've been able to double the dividend. I think it pays pretty close to a 4% dividend, so I've been able to make 8 to 9%. And it, like Coca-Cola, it kind of stays usually stays between 80 and 90. So, and it's a good company to own. Now, this is the app loving company or software. That's the actual name of it. It's kind of unique. They have really good numbers. This is the first time I ever traded with them. April 18th, vertical put credit spread 57.50, 47.50, a 19 delta. So I did take a little bit less risk. At the time, it was 69.50. And this is when we started to get into the rougher time with April, I believe. That I started to lower. Of course, the one right below it isn't lower. But I started to take a little bit less risk, and don't really know a whole lot about this company. I do like their productivity. I like their year over year growth. There's a lot of stuff I like about them. I earned 313 since it was two contracts. That's why it's 1686. That's just 2,000 minus the 313.30, 105% ROI. So again, a good trade. And I believe it's still it's about the same price. It might have dropped a little bit. It might be like 67 now. And then this is Truist. This was a covered call that I rolled. So that's the reason the delta is a lot higher. So just like a lot of the other companies, Truist doesn't move that much recently. It used to, but $40 was still fairly far out of the money. I mean, it's close to 10%. So I felt like it was fine to keep it at that same $40 strike. So I rolled it to 1220. I'd out another 6 months, kept it at 40, brought in $327. The cost basis is 87.17. This is another example of one that at first I had lost. It was deep in the money when it got assigned to me, and now I believe it is profitable. And then so this is like a 5.6 return. I believe their dividend is right around 5.5%. So I was able to double the dividend. And then for the week, I brought in 17.15. So a fairly good week. I've been able to. I think I've had one 2,000 week, one more trade, and I probably would have been in there. My trades are fairly close to 300, so one more trade I would have been at 2,000 for the week. Now, let's go to the top. This is where the planning, and you would think I would do something a lot more complex than this, but so currently my goals are 1,600 weekly and 6,400 monthly. Now, at this time, I was at 5,350. I believe I finished the month a little bit over 7,500. Yeah, 7,556. So in February, I did 6,708. Then in March, 7,300. And then in April, 7,556. So my average was 7,191. So you can see my monthly goal and weekly is too low. I'm able to pretty consistently reach that, and that's really not. That's still doing like one trade a week, possibly two. I think the average is about 6 trades a week. I think I'm at 5 trades for this week, and I'll probably do one more. A lot of times I'll do one trade and move on and do something else. I'm still software consulting. I'm actually helping my son start a business that's keeping me pretty busy. So it's time to kind of, what should my next goal be? What I'm thinking of doing is, doing more like 2,000 and then maybe 8,000 and then so 2,000 on a weekly basis and 8,000 on a monthly basis. And like we saw down here, 1715, one more trade. So instead of averaging 6 trades a week, maybe I'll do one more and get to the 2,000 on a weekly basis, even if I did 250. So it's not always exactly 2,000. I might have one week that's 1,900 and another week that's 2,200, or something along those lines. And the fact that I've come pretty close here, my original thought was maybe I should do 7,500 monthly and maybe do 1,800 weekly or something along those lines. But then I started thinking I do need to up it a little bit and really start ranking these trades and try to do better. So I'm thinking to do 8,000 and 2,000, so 8,000 monthly and 2,000 weekly. I'd be curious to what you guys think. As always, leave a comment below if you think I should take the higher goal. Now, what I'm doing for my trade rankings is I've started working on this. I'm going to, as I have more time, again, I'm very limited time-wise, I'm going to add more and more to this. So I would both rank the company. So the company itself would have an overall company factor, and then I would have a trade factor. So the company would have different rankings like quant, SA analyst, Wall Street, And then also rankings by growth, valuation, profitability, momentum, revisions, 52-week range. That the 52-week range is, I like to look at where a company is on their 52-week range. I try to avoid companies that are in the top third quadrant of that or the top fourth. I prefer them to be, let's just assume there's four quadrants. I'd rather them be in the bottom two, so the closer to their 52-week low than their 52-week high. Now, that may not be the best way to do it, but that's just something I like to think about. I might also need to put PE here, price to earnings, and maybe even some other criteria, but this is just a starting point. And then trade factors would be how much premium does it bring in on a contract basis, and then what's the return on investment on a yearly basis, and then probably some additional factors. If you have anything to add or you think I should look at something in addition to these, please leave me a comment. I'd be curious to hear what you have to say. So that's what I wanted to share with you. It's been an interesting time this week, especially with earnings and some companies really missing earnings. So there again, like I said, in my next video, I will talk a little bit on how I'm handling those situations, especially when, a company misses earnings and their price drops significantly. So hopefully I'll be able to do that video probably on Sunday or Monday. So again, thank you for joining me, and I look forward to seeing you next time.